Boa noite, sejam todos muito bem-vindos ao primeiro SPE Brasil Webinar Series. Eu sou Carlos Roberto Pedroso, desde ontem presidente eleito da Seção Brasil da SPE. Obrigado pela confiança depositada em nossa diretoria. Agora, eu, Mauro Nunes, e toda a nossa grande equipe tem a imensa responsabilidade de manter, ou quem sabe até elevar o nível de conquistas deixados pelo Schmidt, Laje, Capeleiro Pinto, Bruno, Farid Checara, Salier e todos os que nos antecederam e trouxeram a Seção Brasil até aqui, a esse nível impressionante. E com muito prazer, a primeira tarefa oficial será abrir este grande evento. Gostaria de iniciar agradecendo aos distintos panelistas, ao moderador, ao chefe da sessão e a todos que estão trabalhando no background, que estão trabalhando para realizar este evento. O chefe Fernando Machado irá discorrer um pouco mais sobre esse SPE Brasil Webinar, mas deixe-me fazer uma breve introdução. Sempre repito que a missão do SPE é coletar e disseminar conhecimentos e promover a integração de seus membros. Aliás, a SPE, Society of Petroleum Engineers, não é uma associação apenas de engenheiros, mas sim de todos os profissionais de energia. Temos biólogos, advogados, geólogos que participam da nossa associação. Mas o fato é que a história da SPE se confunde com a história da nossa indústria. Adapto uma situação de Ralph Rich, um fraturador americano, que disse mais ou menos isso. Sem a SPE, eventualmente, nossa indústria teria chegado até aqui, mas não tão rápido e não tão bem. Então, no início da crise do Covid e redução drástica do valor do Brent causado pela disputa entre Rússia e Arábia, decidimos que a Seção Brasil iria discutir soluções. E também decidimos usar nossa experiência em realizar eventos de qualidade e conteúdo técnico, com uma sequência lógica, um encadeamento, ou seja, um evento completo, mas adaptando a nova realidade em 12 webinars, que serão realizados todas as terças-feiras, semanalmente, às 18 horas. Então, este foi o primeiro pilar quando decidimos fazer esse evento. Um evento completo, denso, de qualidade, com uma sequência de encadeamento lógico. O segundo pilar foi respeitar a pluralidade e diversidade de nossa indústria. Todo o webinar respeita a diversidade étnica, de gênero, de origem, de formação. Aliás, esta diretoria criou a primeira diretoria, esta gestão criou a primeira diretoria de diversidade da história da Seção Brasil. Desejamos muito boa sorte à nossa diretora. Assim, sejam muito bem-vindos e aproveitem esse grande evento para discutir as soluções para a nossa indústria. Agora passo a palavra para o nosso diretor de eventos e chair deste webinar series, Fernando Machado.
Obrigado, Pedroso. Caros colegas da indústria, como já foi falado, o vídeo mostrou, o Pedroso falou, no início deste ano nos deparamos com um cenário inédito para a nossa geração. Uma pandemia, com suas consequências para a economia mundial, reduzindo drasticamente o consumo por petróleo e gás, e um embate travado entre duas grandes nações, Rússia e Arábia Saudita, que não chegaram a um acordo com relação à redução das cotas de produção. E o resultado todos nós conhecemos. A queda do Brent, de forma acentuada, cancelamento de projetos, demissões em massa, dentre outros problemas. Temos, então, os componentes para a tempestade perfeita na indústria de óleo e gás global, assim como para a nossa indústria de óleo e gás nacional, visto que 96,7% da produção do Brasil vem de campos localizados em águas profundas e ultraprofundas. Então, como o Pedroso falou, cumprindo a sua missão de disseminar conhecimento técnico, a SPE Seção Brasil montou o seminário virtual Resiliência dos Projetos Offshore do Brasil. Entre 4 de agosto e 20 de outubro, teremos uma série de 12 webinários semanais com foco técnico-gerencial, proferidas por importantes executivos da indústria, onde serão debatidos os caminhos a serem seguidos por nossa indústria offshore após essas mudanças estruturais, de modo a assegurar que continuemos a prosperar em um mundo pós-pandemia. Deve ser observado que esses webinários, como ressaltou o Pedroso, foram organizados em uma sequência lógica, iniciando hoje com o tema mais abrangente para contextualizar o cenário, seguindo a cada semana para temas cada vez mais específicos. Temas como questões regulatórias e suas implicações na atratividade de novos investidores ao Brasil, inovação tecnológica, otimização da implantação de projetos de poços, projetos subsea e projetos de instalações de produção, serão discutidos junto com os demais temas que visam aumentar a resiliência da indústria, como novos modelos de negócio, aumento da eficiência, maior disciplina de capital e a parceria entre operadoras e fornecedores de bens e serviços. Caros colegas, que 2020 seja uma grande oportunidade de transformação da nossa indústria. E como diz o ditado, mar calmo não faz bom marinheiro. Somos uma indústria resiliente e chegaremos ao final desta jornada mais capacitados a enfrentar as adversidades. Para conhecer a agenda completa desta série de webinars, visite a nossa página www.spebrasil.org. Sendo assim, iniciamos o webinar apresentando o nosso moderador Anderson Dutra, que é diretor da KPMG Consulting. Anderson, por favor.
Hi, everyone. I'll switch to English. We have a executive that will be part of this panel. Firstly, I would like to thank you, Pedroso and Fernando, to be part of this team. To me, it's a really honor to participate with SPE in this event, and also to help SPE to generate such relevant content to the market. SPE has contributed a lot for developing executives, and those executives consequently contribute to strongly move the industry forward. Even with the potential global crisis announced by the beginning of December last year, as Fernando just said, with the slowdown of China, the geopolitical challenges involving Saudi and Russia, and further on the pandemic crisis, Brazil has been moving strongly in the right direction, since the country has demonstrated a very robust and sustainable growth perspective. A number of negative outcomes impacted the core business aspects of the sector. As Fernando just mentioned, oil price oscillated in an unprecedented way. Companies started spending high costs with logistics storage to avoid, of course, stopping production. That would be much more expensive, and which could bring even more negative impact in certain regions like the US. Consumption projections were totally reduced due to the expectation of new and different customers' behavior. Home office practice, sharpened marketplace, urban mobility, among others. We do believe that this new reality has been anticipating trends that were previously expected to happen in the near future, maybe by 2035, 2030. Those events brought structural change in the oil price dynamics and implications in the Brazilian market. Competitiveness became crucial to survive in this sector. What can we expect from this new reality? Are we competitive enough? Will the world consumption remain the same? The renewables continue in the top 5 agenda of the executives? These and other questions will be discussed and addressed by our guests in this panel. So I would like to introduce, firstly, Carlos Pascual, the Senior Vice President for Global Energy at IHS Markets. Sorry, Carlos. Joao Vieira, Commercial Advisor at ExxonMobil, and we have to say, previous Secretary of Oil and Gas from Ministry of Mining and Energy. Joao has performed an excellent work while working for the ministry. Thanks, Joao, for the period you contributed to the industry while working for the government. And Ricardo Besada, the Executive Manager and Head of Finance and Treasury at Petrobras, a brilliant person who I had the chance to work with in the past and from which I learned a lot. Thank you, all of you, to be in this panel discussing with our group and SP members and our friends and guests in this event. I will start with Carlos discussing geopolitical aspects. Carlos, I would like to ask you to comment on the following, and of course, feel free to step back and give us an overview of the market if you think will be much more comprehensive to the audience. First, the relationship between OPEC plus producers and shale producers, and then the risk that alliance we saw in April to curtail supply chains and consequent implications in the global price.
Well, Anderson, thank you very much. It's a pleasure to be with you. It's a pleasure to be with this distinguished panel and to be here with SP. I really appreciate the opportunity to join you. The question that you posed is really at the heart and the center of what's happened within energy. And in some ways, the story of energy over the past months has been one of disease, of politics, of commercial realities, and of challenges to new levels of effectiveness. And so in that sense, having this discussion with SP is absolutely appropriate because it's so critical to be able to understand how to respond to this crisis. Let me lay out a few points. The first should seem obvious, but this pandemic has been global. It's affected 18 million people. We have hundreds of thousands of people who have died. Every country in the world has been affected by it. And yet the solutions that we've generally seen have either been national or even subnational. In the United States, increasingly, some of these are at a level of municipalities. And it's not surprising that as a result of that, we haven't been very effective. We are inescapably interconnected, but the solutions don't recognize that interconnectedness. And until we do, it's going to be hard for us to get beyond this pandemic. And we have to keep that in mind. The second point is that the disease has precluded us from gathering physically. And that affects the ability to manufacture, to have events, to travel, to do social things, to go to restaurants. And it's had a devastating impact on employment, but also on GDP. Worldwide, we've seen a contraction by the end of this year of 5.5% of GDP that we're projecting. In the United States, in the second quarter, GDP contracted on an annualized level of 32.9%. That's the most that we've seen since 1947. And it's no surprise that as a result of that, the contractions we've seen in China, the United States, other parts of the world, that oil demand collapsed, as you've laid out in your discussion, in your video. And at the beginning, it was China, and it was 7 million barrels a day. But by the time we got to the end of April, demand had collapsed relative to the previous year by 22 million barrels a day. And in this context, we come to the story of Russia, Saudi Arabia, OPEC+. So at the beginning of March, there's a battle over price, but questions over market share. While Saudi Arabia over time had reduced its market share to sustain price, Russia's cuts had been relatively minimal, and the United States had become the largest producer in the world. And trying to decide how to move forward, they couldn't come to an agreement. The Minister of Energy for Russia, Mr. Novak, had gone back to Russia. He had consulted with President Putin. He came back to the discussions in Vienna. They couldn't agree. And after they failed to agree, what happened? Saudi Arabia and the other Gulf countries actually increased their production by 5 million barrels a day at the time when we were in the middle of proceeding to a 22 million barrel a day collapse. What happened? The price collapsed. We saw prices go down for Brent to $15 to $20 a barrel. They would go down more later. I'll come back to that. But then we saw something else historic. We'd never seen this before. The President of the United States directly calls the President of Russia, the Crown Prince of Saudi Arabia, and says, we need to work together to bring up the price of oil. This is the same president who had previously been tweeting at Saudi Arabia saying that you're not producing enough and you need to produce more. And suddenly we have this turnaround in the political dynamics. And we get an unprecedented agreement among the OPEC countries, Russia and others called now the OPEC plus countries. And then the G20 comes along and reinforces it in a different way. It says that it has to be enforced through market dynamics, but we begin to get the picture that the situation will change, but not quite yet. And one of the things that hadn't been counted on was storage, global storage, and in the United States. Because if you can't store oil, and if you can't sell it, you can't produce it. And in the United States, on April 20th, we had a historic event. The price of oil became negative because it became impossible to store additional commodities over the period of the next forward price that came due in May. And so producers actually were paying people to take away their oil. We finally saw things begin to settle in May and June. The production cuts that the OPEC plus countries had taken, 9.7 million barrels a day, started to come into effect. Demand had hit its low point in April. We started to see a rebalancing in the market. Prices started to come back into positive territory. And we began to get an impression that potentially things could move forward. And still, we see that maybe things don't move as quickly as we thought. This overhang of inventories of about 1.5 million barrels a day continues to hang over the marketplace and has affected the pace of price increases. The United States has surprised many countries because US shale producers are the ones that most easily react and respond to changing price signals, have seen the biggest cuts between 1.7 and 2 million barrels a day, projected to cut about 3.5 million to 4 million barrels a day by the end of 2021. And this creates an interesting situation. Saudi Arabia is going to start increasing production. Russia is going to start increasing production. And that works as long as we have this reality, that the US continues to go down. And that depends on still reducing CapEx expenditures, as we've seen already happening, on the reduction of rig counts continuing. Because as soon as that changes, then we have a different environment. Today, the United States, Russia, and Saudi Arabia have a common interest to see some constraint on production, an increase in demand, Saudi Arabia and Russia seeking to have increased production levels and increased price at the same time. And the only way that happens is if production in the United States goes down. And so I'll leave you with this final point, and maybe we can explore it further. Will demand in the global market still allow this trend to continue? Because in the end, the changes in demand have become even more important than the changes in supply. And today we're starting to see some changes in the marketplace because what we're seeing in pandemic. This has been an extraordinary, complicated story that is linking disease, geopolitics, commercial activity, and technical capability. And certainly it's going to continue to produce challenges for the industry as we go forward.
Yeah. It's like Fernando said, we are in the middle of a perfect storm. But I would like to take the advantage in what you have just said and ask something to Besada. With the current change in the medium long-term oil price, as just mentioned by Carlos, there is a big trend that the peak of demand will be anticipated, and consequently, several assets have been already impaired worldwide, and others, have been even canceled. What do you believe to be the key engines to accelerate investment in order to enhance our profitability and monetize our natural resource? How the industry is expected to be founded in the near future?
Of challenge that the industry are facing now. First of all, I think is an economic problem. If you look at past performance of the sector, oil and gas has not delivered the total shareholder return or the return on capital. It was the worst sector of S&P 500 in the last 10 years. So that was a problem before COVID-19. And now, after COVID-19, we have this huge uncertainty about demand. We see a lot of demand destruction. We don't know if the demand are going to come back. If you look at aviation, for example, people don't have any idea how, when, and in net level, the demand are going to come back. And maybe you have some supply destruction, but you're going to have a lot of volatility in price for the near future and maybe forever. So how to deal with this volatility? I think the companies should address this kind of volatility with three different approaches. First, you will have to find balance sheet resilience, basically low debt. So in this kind of environment, with real uncertainty at your cash flow, you have to have low debt. So low interest rates and low amortization, you are more secure to survive in this kind of oscillation of the market. The other address issue is to be owner of first-class assets. So what do I mean? To be on the best sides of the supply cost curve. So if you have economic costs that you are able to sustain low levels of price, you can operate in this environment and you can navigate when the higher price are going to happen. And the other point is have operational process that fits the assets that you have. So you must find this kind of process that put you in the competitive environments that you can be able not just to be in the right place of the curve, but also to source the equipment and to put the projects in order to have the right full cycle break-even cost of these assets. That was the first issue, so price volatility. But there's another issue that we don't know now which kind of psychological scars the COVID crisis are going to bring in the society. So what do I mean? What kind of demands are going to appear in society about these long tail risks? And I'm talking now about climate change. So if you look at markets, capital markets, they usually anticipate risks. So if they sense a high risk in the future, they start to act now. So what we had to see is the money market managers, they are allocating less and less capital in oil and gas. So basically, there's a risk that people are very skeptical about the sustainability of the business, and we begin to lack capital, or the cost of this capital began to improve a lot. And if you remember our business model, basically capital must flow to the business in order to produce the next barrel. So I think you have two problems to address. One problem is more evident, that's price volatility. But there is another problem, that's how we are going to fund the next barrel in a world that people are very, very concerned about tail risk events, climate change, and they are very, very pressured. For example, money managers and actual investors in order to don't allocate capital in this business. So I have two kinds of problems, and we have to prepare for that.
Excellent. Excellent that you mentioned that, because we will be discussing soon our next event on, I think it's August 18th. We'll be discussing exactly this, the view of the investors in this scenario. João, now that we talked about oil price oscillation, we talked about the assets worldwide, the new reality. How do you see portfolio management process of the majors in general? Okay, you don't need to mention one or another, compared to the Exxon's Models 1. Exxon has done recently a very quick and robust movement with its portfolio, and this was very well received by the market. And what has changed with the current crisis, and what Exxon has done, to move so quickly and to adjust its portfolio in the middle of this scenario?
Yeah. Hi, Anderson. Hi, everyone. First of all, thanks very much for the invitation. It's a pleasure to be in a panel with such distinct audience and panelists. So regarding the question, I will refrain from commenting on other companies' portfolios strategy, right? But what is very clear and what is very visible is that pretty much all the IOCs pushed the same buttons, right? And started and reacted to the crisis in very similar ways. So there is the need to adjust to the current environment, to the current climate, investment climate, and all of them reduced capex, announced capex reductions, announced OPEX reductions, and are following up with those targets. ExxonMobil is no different. So we did announce back in April a 30% capex reduction worldwide, and 15% OPEX target reduction for the 2020 year. But what is relevant as well is that despite all this reduction in the whole industry was very diligent in maintaining operations, safe operations, and integrity of its operations, and the production levels to the best possible levels, right? Of course, there's the demand destruction is, as Carlos mentioned, is unprecedented. The combination of such a demand destruction with such a oversupply as a consequence of the OPEC plus movement is also unprecedented. and it challenges a lot of existing beliefs in the oil industry, right? Having said that, the long-term Exxon's view is that the long-term fundamentals remain the same. So this is a business that is based on a depletion resource, right? Which the hydrocarbons depletion from the fields. The view from, and that's not just Exxon's view, but the view from any institution for the future is of increasing need of energy for the whole society globally. And despite the scenario that plays out, the need for significant investment in hydrocarbons will continue, right? And that's because despite any estimation, perception of when would the peak demand for liquids arise, the rate of decline from current production is a lot bigger than the possible rate of reduction in the energy demand, right? In the energy demand and in the hydrocarbons demand. So energy demand will continue to go up, and hydrocarbons will continue to play a significant role in there. So that's why we truly believe that the long-term fundamentals are there, and then we have to separate this the whole strategy of to deal with the short-term situation, and maintain your portfolio safe and sound for the long-term opportunities that will come. So that has been the direction that Exxon took. Of course, as Besada mentioned, there's a lot of concern on liquidity and debt issues. So to maintain, for example, Exxon to maintain its dividend policies, there was need to issue some debt and adjust with the capex adjustments that are needed for this period. But the important point is, as also Besada said, the long-term view of having first-class assets in its portfolio. It's what will continue driving the success on the industry, right? So it's and we believe, Exxon really believes that its long-term portfolio is very well positioned to take the opportunity when the recovery comes up.
Okay. Thank you so much. It's good to hear that from you, Joao. Carlos, you already said that the hydrocarbon sector had some pandemic, but we have seen the U.S. and other countries raising infections and solid growth. What's happening so?
Anderson, it's an unfortunate period that we're seeing right now. Early in the pandemic, we used to talk about bending the curve, right? And it usually meant, how do you get to a situation where you reduce the rate of infection? Today, we're bending the curve in a very different way, which I don't think any of us would like to see. We're in a new reality where we have higher rates of infection. We've reached a plateau with those high rates of infection. We've also gotten to a situation where economic growth has flattened. We began to see some recovery and it's flattened. And let's take a moment to understand why. The case of the United States is maybe the most clear-cut. There was a sense that the situation was beginning to get under control, particularly in May, June period. And the temptation was to open up the economy. Everybody wants that. Everybody wants to resume a normal life. Everybody wants to get back to economic growth, to be able to work, to provide for their families. And the problem was that those openings occurred at a point in time when the infection was still increasing. And as the infections occurred, what essentially was that new infections just took off. They skyrocketed. And governments had to respond. And increasingly what happened in the United States was that the responsibility was moved from the federal government to the state government to municipalities. And the responses were inconsistent. And so what you began to see was a rise of infection, a shutting down of economy in some places, getting better, then another opening and a rise of infection. And we began this back and forth process with increasing infections, a tug of war on the economy. And eventually we ended up in states like Texas and California and Florida, where we're seeing 10,000 infections a day and where the economic growth has essentially stopped. And the question has become, how do you get out of it? And do we have to start all over again? In developing economies, emerging economies, economies with large informal sectors. I live in Mexico now, and we see it here. The informal economy is about 50%. So what happens? In order for those people to earn money and to be paid, they have to work. And so that demand, that drive to be able to survive is keeping people going out, working, contact with others, and infections continue to rise. And so we're in a situation now where people are beginning to ask this question, where does it go? And as this occurs, inevitably, it continues to affect demand for fuel. It affects the ability for economies to grow. It raises questions about whether the OPEC plus countries will recognize these changes and whether they're going to have to make additional cuts and what kind of balance and price we might be able to see in the marketplace. So unfortunately, it is a period of additional uncertainty. And that additional uncertainty comes at a point in time when we're all asking the question, when will we see a vaccine? But not only a vaccine, which in principle has been developed, but enough of it has actually been produced so that it's actually in people's arms and it makes a difference. And I hate to be negative in this way about some of these doubts and uncertainties, but I think it's important to face up to these kinds of realities. As Joao just said, you have to be realistic about the kind of portfolio you have. As Besada said, you have to have a development of the best assets. And so we're looking for bridges beyond this period. And what we need to understand is that we're going to need a bridge because we haven't come to an end of the impact of this pandemic on how it's affecting the potential to grow and the geopolitics around it.
Oh, excellent. And Besada, tell me one thing. I don't think the message was really negative, but it was more realistic, as you just said in the end, Carlos. And I want Besada to comment a little bit, about these new opportunities. We always saw, we are actually in the middle of the matrix transition. So the energy matrix is transitioning, and we always saw the gas as a protagonist in this energy transition. And what do you think, Besada? Will the gas be the main driver for this transition, or do you think the renewables, mainly with the post-pandemic will gain first, considering, all these sustainable business aspects, ESG index? Which one will be more attractive for the investor?
Yeah, in terms of power generation, electricity markets have two issues, and you have to be very realistic here, as Pascual said. Renewables are unbelievable competitive. So basically, we are seeing a deflationary process in energy generation costs. And if you look at Brazil, basically, how can you compete with a producer who has a marginal cost near zero, or basically zero? So that's an issue. The other one is if you expect that diversification is a value, what you have to do. If you look at Brazil, what are the issue with renewables? Basically, intermittence. So does not if you look at sun, wind, and rain, sometimes there's no rain, sometimes there's no shiny times, sometimes there's no wind. So you have to put another power in order to guarantee the supply of the energy mix. So that's an issue that natural gas could play a role here. But specific in Brazil, we have another point. The big issue in renewables now is how you find storage of energy. So the next 10 years, people are going to invest a lot of money in trying to figure out how to storage wind and solar energy and other renewables in order to smooth this problem of seasonality of the generation. So, but in Brazil, you have the reservoir, the water reservoir, that could play a role in this kind of battery of the system. So it's more even challenge for natural gas. And then I think for natural gas, what you have to look is how you can maximize value of this resource for society. And I think that natural gas plays a huge role in terms of value and how it contributes to increase the production of oil and to sustain the production of oil about reinjection. So we have to balance in order to maximize value of natural gas for society. There is this hole at the reservoir, the oil reservoir, and also could be a hole in terms of how could you keep the balance, the energy balance system in order to supply in an environment. If the system values security, I think natural gas could play a role in order to keep the reservoir supplied, and the other source of renewable energy could play. But it's very difficult. It's very difficult to compete with the renewables now because they basically run on a marginal cost near zero. And if you look at capital, I think renewables are going to have a lot of cheap capital in order to invest. And maybe for oil and natural gas, probably the capital will be more expensive in the long run. So it's a very tough competition that we see now.
Okay. Joao, while you're hearing that, could you please comment what kind of opportunity emerges in the upstream market in Brazil with what those guys just said and all this current change in the matrix, and how the technology can affect it? I heard once, that the oil companies, mainly in the upstream side, will start to be seen as a tech company specialized in oil and gas. And do you agree with that?
Yeah, okay. So I will start saying from the opportunity side that Brazil has a great opportunity not to miss an opportunity, right? I remember a speech from Décio Odoni on opening of the last Rio Oil and Gas, and it was a very interesting speech that he was talking about the obvious actions that should be taken, and sometimes these obvious actions are not taken in Brazil, and sometimes you have to justify the obvious. So I think what's very obvious with this current situation is that the the country needs to improve its fiscal terms, and it needs to improve the attractiveness of its future auctions to be able to see more investment in the country. I mentioned on the first, your first question regarding the adjustments that the industry is making, the reduction in capex for the 2020 time frame, but of this capex reduction might, or the reduction in capex levels might sustain for a while. There is a lot of uncertainty in the industry. As Pascual mentioned in the beginning, we are really in uncharted territory, negative prices, which the industry has never seen in over a century in its whole history. Besada posed the question of how to fund future projects, posed the statement of how to fund future projects, which will be a challenge, and will be a challenge in a scenario where there's very few capital available to fund new projects, right? So the competition for these scarce resources, the scarce capital resources, is global. Countries all over the world will be competing for this, and not only oil and gas, but will be competing to other energy sources as well. So to be able to bring new capital for the oil and gas industry in Brazil, there needs to be an improvement in the fiscals and in the regulatory framework of the oil industry in Brazil. We had prior to COVID and OPEC and the OPEC Plus events that earlier this year, we had a very disappointing bid round in Brazil in late 2019. Not only one, but two very disappointing bid rounds. The TR surplus and the PSC 6, the production sharing 6 bid round. That IHS is here. I've seen some IHS report comparing fiscal terms in Brazil to other deepwater projects. I've seen other consultant reports as well. The production sharing regime in Brazil sits always in the low end of the attractiveness, and of course the pre-salt province is a very prolific, and the geology is very attractive, but it's still an exploration play, and exploratory success in the industry probably averages around 20%. Economic success or commercial success probably averages around 10%. And even though the pre-salt has had some better numbers than this recently, it will eventually converge to that. So as the best areas are auctioned, the new areas that will come to tenders tend to be more challenging geologically and economically. So if the country has a great opportunity, the current government has a great opportunity to revise that the regulatory framework and the fiscal, the government take, and I'm not talking just about bonus royalties and production sharing or special participation, also the indirect taxation, which is a burden in the Brazil to make investments in Brazil. So the Brazil system is very regressive. That is the least you want in a low price scenario that we are currently on. And on the first question about the portfolio, I forgot to mention that the new projects will also have to fight for capital with the existing projects in the portfolio of all IOCs. So a completely new area to be attractive, to find capital for it to be funded, it will require very good economic perspectives, right? So I think I think the government is doing. I think right now they are doing the correct movements. Exxon has been invited to present its view on the BIDSIM committee that the Ministry of Mines and Energy has put together. I know other IOCs also have been invited. The IDP has been invited. I think it's very important that the government understands the message and works in making this the regulatory framework and the fiscal framework attractive in Brazil. And on the regulatory framework, it's very important to mention that it's very cumbersome, especially for new investors, to come to Brazil and see a country that has like 3 different contracting regimes. The production sharing regime is not as attractive as the concession regime, and the country has a very good opportunity to go back 1 decade back to prior to 2010 and go back to a concession only regime, which I think would be a very great step in reducing uncertainties, especially in the current environment that the industry is facing.
Joao, excellent that you mentioned the regulatory framework, and we'll actually be discussing next week how to enhance resilience and attractiveness to the Brazilian market in this sector. And I also can imagine, Joao, that it's very challenging for your team here in Brazil to attract internal investments. Internally, I mean, inside Shell, Exxon, investment to bring the money to Brazil and to prove that we are competitive enough to adequately remunerate the investor and the stakeholders. But well, we'll come back later on the competitiveness. But before that, I need to return to geopolitical aspects, because we need to talk about our I would say, or I may say, our biggest partners, that is US and China, that are, the world's largest producers and also consumers. But nowadays their interests are in conflict, not only in energy, but in everything. And as I said in the beginning, they are our biggest partners. And how might, Carlos, the US-China conflict affect global oil price?
Anderson, I think it's become my turn or duty or responsibility as a former diplomat to tell all of the negative stories about things that are happening in the world. Maybe you'll never have me on a video conference again, because you'll say he only brings bad news. But I'm glad you raised the issue of the United States and China, because as I travel around the world, or as I used to travel around the world, now I travel around the world in video conference. It's probably what's happening between the United States and China is the issue that people ask me the most about. And indeed, it really has become the epicenter of global tension and conflict. But these issues are inextricably related to politics. And let me put it in very simple terms. In the United States now, there are 4.7 million cases of COVID-19, and about 156,000 people have died. That's about 3 times the number of people, of Americans, who died in the Vietnam War, just to give you a sense of the scale. In China, the number of cases, even with the recent resurgence we've seen, is about 88,000, and about 4,700 people have died. And so for President Trump running for re-election, the last thing that he wants and he needs is for the American people to blame him for that differential between the United States and China and the mismanagement of the pandemic. And for China, a critical issue has become not to be labeled as the source of the pandemic that began this global crisis. And so we begin with a political situation that promotes tension. And it's only been increased as a result of the change of the Hong Kong security law, and then issues about arms sales, US arms sales to Taiwan, about conflicts over the South China Sea and the US position that it's taken of not recognizing any of the Chinese developments. We see additional tensions that arose just recently with both countries closing one another's consulates in two parts of the country. And what we see over and over again is that every issue that existed before, the trade wars, issues over intellectual property, cyber warfare, questions about arms development, the battle for influence globally, all of those things exist as they existed in 2019, and we saw them become a drag on the global economy. And they're probably even more raw, more exposed, and harder to resolve right now than they were before. And so the first big issue that we have to keep in mind is that what we saw in 2019 may indeed repeat itself. Now, I don't think that before the elections that the United States and China are going to come to a point of coming to some kind of conflict. It's a risk. The tensions are increasing. I think for the United States, we will probably see an electoral strategy on the part of the Trump administration, which we've seen in other administrations, which is to say that certain tensions are so big that you can't afford to bring in another person to take over. We saw that with the war in Iraq in the race between George W. Bush and John Kerry. And so that would not be strange. But there are issues that are going to affect oil markets, and a couple that are immediate. One affects Brazil. China has been radically increasing its inventories of oil during this period of time when the price was low. And Brazil has been a beneficiary of that. But China is coming to a point where its storage capabilities to build inventories is coming to an end. And so what happens when this average of about 2.4 million barrels a day that China has been importing above its usual levels, what happens when it can no longer do that? And will there be other demand that continues to compensate for it? We have to ask for the future, this tension between the United States and China, the world's largest oil importer, at one point the world's largest oil producer. How does this play itself out in the marketplace? And are we going to see a radical shift that we might see in overall global demand, in addition to all the factors that we've been talking about so far? And then the other critical issue with China is that it seeks to be an energy superpower, but in renewable energy, in clean energy, where it reduces its vulnerability to imports. And is that going to, in some way, potentially accelerate this process of change that Besada was already talking about, where we see greater competitiveness on the part of renewable energies? And so for the short term, I think the issue with China is to look at what is the impact of reduced imports into the country? How might that affect global balances? For the longer term, is there going to be an acceleration of the shift that China has been trying to make to put a greater emphasis on non-carbon fuels and a greater emphasis on renewable energies? And is that going to shift and accelerate the process of moving to a low carbon economy into the future? I think big questions to be able to examine and think about and incorporate into our business strategies.
Great, thank you so much. Besada, competitiveness. This has always been the top agenda of the industry. I remember when Marco was the president of IBP, he mentioned that several times, that we really must be competitive, to attract investors. With the pandemic, and I think, pre-salt is a good example. The work well done that Petrobras has made with partners here in Brazil. With the pandemic impact, several majors started rethinking and reducing OPEX and lifting costs. How do you see the Brazilian industry in this context as a whole?
So I think you have two issues about that. So one thing that we are wondering about in the industry globally, not only the global oil and gas industry, but everybody, is maybe the world is moving from a just-in-time cost approach for a just-in-case cost approach. So people are wondering about redundancies, and for example, storage became a huge redundancy and saved a lot of money during this crisis. So there's an issue that maybe people are discover the supply chain of suppliers were too thin or too global sparse, so maybe it's better in terms of risk assessments to concentrate that near the production and stuff like that. So that's an issue. The other issue about Brazil is that OPEX is a huge issue in terms of short term. It decides if survive or not a price shock. But in the long term, you have to see the full cycle costs. And what's that about? The full cycle cost is not only OPEX, it's considered CAPEX, government take, time value of the money, and also the price you pay to access the play. So if you look at that, I think Brazil has a good play, a good hawk, but sometimes the way that we arrange the access to that rock, or the binding, or the normative environment, are very complex and not difficult to change depending on the incentive. So if you look at the competitiveness in the long term, I think you have to not only look OPEX, but look the full cycle costs to deliver that next barrel. So in this point, I think you have a huge challenge in order to approach that full cycle cost, including the money that you pay to access the area, in order to compete with the other opportunities to produce the next oil in the world. In a world that probably demand are not going to grow as fast, or maybe even grow as we saw in the past, and the marginal producers of the world, they want to monetize fast the reservoirs that they have. So think about Saudi Arabia or Russia. If they realize that oil are going to have some price issues the next 10 years or 20 years, they want to accelerate that in order to monetize those reservoirs first. So as a society here in Brazil, I think you have to be concerned about what we can do to bring down the full cycle cost of the industry in order to monetize our resource first, or maybe even could monetize in terms of history, because otherwise doesn't make any sense for society of Brazil to be with this reservoir down the sea and never even using that. So
great. We are receiving lots of questions here, and I will definitely try to address all of them. If not, we'll respond by email. But João, how do you see the future of the oil industry in Brazil, especially in the upstream segment? And of course, the most wanted question that everyone wants to hear from you: what's the future of ExxonMobil in Brazil?
Yeah, okay. So I think we are very confident that with a great future in Brazil. Exxon has created a great portfolio of assets in Brazil. We are very excited. I can say the whole industry, the whole company is very excited, and in pursuing this portfolio. I mentioned in the beginning the capex cuts that achieved the whole industry. A good measurement of how the Brazilian portfolio is important for ExxonMobil is the fact that the Brazil portfolio was completely preserved from any capex cut. So we are developing our projects as planned and as forecasted prior to COVID-19 or prior to the OPEC Plus event. So we are very confident that the portfolio that we acquired in Brazil and the partnership that we established with Petrobras, Equinor, Galp, and all others in Alta, and will position us well to deliver a great value to our shareholders. So I think the biggest challenge for the future of the industry in Brazil is in line with what I mentioned before, that the government has to be able to strike the correct balance on the risk-reward equation to attract future investments to the industry. And also, as I mentioned before, the opportunities now. The oil industry is famous for its volatility in terms of price. The industry is accustomed to that, is used to that, but nevertheless, it must be realized that the current swing is probably an unprecedented one. And despite we believing, and I mentioned that the long-term fundamentals are still there, and we do believe that despite we believe in that the swing, that there will be a recovery and more, and prices will recover as well. The uncertainty that lays around all around the industry nowadays is very big. So the countries all over the world, and Brazil in particular, need to take that into consideration and improve the attractiveness of its areas, right? For its future acreage. Besada mentioned about the good rocks that we have. I agree, Brazil has very good rocks, but you need the rocks, you need barrels, and you need dollars, right? So you need to have the oil there, you need to be able to extract the oil, and you need to be able to monetize the oil and the gas as well. So if the three conditions are not there, the projects won't go forward, and that will be very frustrating, not only for the industry but for the country as well, and for the society, for Brazil society overall. So I think Exxon has placed a big bet in Brazil. We have a significant acreage position. We are very confident on the success of this. We're very excited of the campaigns that are going forward. So we have some non-operated assets on exploratory campaign that are ongoing. We have the development of the Bacalhau field together with Equinor, which is also ongoing as planned. And we have our own operated exploration assets, which the campaign is on track. The drill ship has been contracted. It's been revised prior to coming to Brazil, and we will start drilling our own operated acreage by the end of this year or early next year. And we are very confident that it will bring the value that we expected from this portfolio. So it's exciting moments for ExxonMobil in Brazil, but we must not forget that the industry is facing some very challenging periods, and it's facing a very challenging period, and therefore we need to improve this and the future of the next tender rounds in the country.
Excellent on that. Yeah, actually, you have already addressed one of the questions that was about the portfolio in Brazil. We are approaching the end, but before the closing remarks, I will address some questions we received, and one of them is to Carlos, and I'll try to combine the two questions. The first one, sorry, Carlos, I know you are not a machine because this thing just happened. But if you can say a few words about it, we highly appreciate it. The question is, with what's happening in Lebanon and the impact in the oil price may affect the markets as a whole, or this is just something isolated? And another one is the impact of the election, if the impact of the election may change significantly the oil market.
Thanks, Anderson. So on the two things, first of all, on the explosion in Lebanon today, we still don't know very much. Tragically, 60 people were killed. They're saying about 3,000 people were injured. It destroyed part of the port and buildings throughout Beirut. And certainly we reach out and send our support and our prayers and our thoughts to those families who have been affected by all of this. We still don't know who did it, which obviously affects the implications. Some indicated that it was unstable explosives that had been in a storage facility. And then obviously every time there's something that happens in the Middle East, everybody wonders whether it was an act of terrorism. If one puts this in context of what's happening in the Middle East generally, of the tensions internally within Iraq, the ongoing devastation in Syria, ISIS beginning to create a foothold, the demonstration of ISIS's capacity in Afghanistan that it showed yesterday when it freed prisoners in Afghanistan. This is probably relatively small. I don't think that it will have a huge impact on energy markets or on oil prices. What I think it does point to is something a little bit broader that's worth thinking about, that increasingly what we see with the withdrawal or the restriction of US troops in parts of the Middle East, with Russia being a party to many of the conflicts, with Europe being distracted on other issues, that increasingly the arbiter for bringing about peaceful solutions in the Middle East is now harder to see. And what we may end up seeing in the future of the Middle East is that the future is actually dependent on what the Middle East does. And that's a situation which we haven't seen in the past decades, where we have had some dependability of outside partners to try to bring about stability and peace when there have been tense moments. On the issue of the elections in the United States, obviously the differences between President Trump and Joe Biden on energy issues are quite enormous. Even the way they talk about them, President Trump focusing on energy dominance, Joe Biden talking about sustainability and having pledged to zero net emissions by 2050. I think what one would expect as a cross-cutting difference between the two presidencies is the way that they approach the international community. President Trump has essentially established a pattern of direct engagement and confrontation with other countries. We've seen it in the direct confrontations with China on trade issues. And in a sense, the United States has not been a multilateral player in the way that it has been in the past. For Joe Biden, his history in politics is quite different. It's one of engaging with other countries and feeling like we live in a world where we're interconnected and therefore have to engage with other parties. And so I think there will be a difference in approach and style in the way that issues are addressed. And the first one of these will be climate change. What one would expect in a Biden presidency is that on day one of that presidency, Joe Biden would probably say that the United States is rejoining the Paris Agreement. The question that people ask is, will there be a significant difference on hydrocarbons? There will be a difference. Exactly what that will be, we'll have to see. Joe Biden has not supported some of the calls for a ban on fracking that took place during the Democratic primaries. There are some within the Democratic Party who are obviously still pushing in that direction. And yet we've also seen from the way that Joe Biden handled himself as vice president that he recognized that there was a great importance of having access to stable supplies of oil and gas in the international system, and that this was critical to economic growth over time. So we'll have to see how that plays itself out. But I think that probably the biggest difference that we'll see emphasized in policy up front is on questions of climate change and sustainability and how the United States re-engages as an international player in that arena.
Great, Carlos. João, there is also one question for you. I will also combine them because the question is like, although, you know, we believe the investments Exxon was made in certain regions. I think he's referring, for instance, to CL bases. Don't you think those investments may change the rate of return to a lower level?
The rate of return of any specific investment?
Yeah. Actually, in general, let's say investment you're looking for may change your ROI to a lower level, but of course could benefit certain area.
Well, I think the point is against the portfolio, right? So the projects that will get funded, be it a development project, be it appraisal, be it a pre-exploration, will depend on the perception of how that risk reward will go forward, right? So the scarcity of capital to fund all the projects that on the portfolio is a reality. We do believe and we expect that it's a short-term reality or a medium-term reality, but it's a current reality. So the companies, not only Exxon, but companies all over the world, and not only IOCs, any company in the oil industry has to select its best assets. So low rate of return projects are very difficult to make this cut, and that's why I am mentioning that. So there was a cut defined on the portfolio that will be pursued. That cut was elevated because of the capital scarcity that we are right now because of the oil price drop, and now there are projects to make the cut and to be really funded need to be even better than they were before. Having said that, I mean the projects that and all this is portfolio management, right? That's exactly what the term states for. So you will prioritize the projects that will will address the best returns and metrics, because not only returns, but they are the best metrics that the company wants for its portfolio. So returns, of course, but so there are production targets, there are exposure targets. So the capital will be allocated, and some of them will be deferred a little bit. But of course, you want to maintain that portfolio that you have, so that you can monetize it and as soon as possible when it merits the funding that it needs. So maybe I'm not sure I'm addressing correctly the question, but to make it a short answer is that of lower rate of return projects will have a steeper curve to face to be able to attract funds from any company, right? So and that ties well with what I was saying in some of the other questions and some of my other interventions. The new projects, which are new tenders, for example, need to be even more attractive on this risk-reward balance, because they are not just fighting against global competition. They are also fighting for funds against the projects that are already on the portfolio of the companies, and some of them are projects that are good. They are just deferred because of a current scenario or a current framework that's restricting capital for those projects. But those projects are paid for. The Besada mentioned about the upfront payments, and we're talking about he's talking specifically about the bonuses, right? So high bonuses is one of the most regressive terms of the elements of the Brazilian fiscal system, and the higher this bonus, the least attractive this project is going to be, and that's a given. And especially on the current environment that we have, that we really expect it to sustain for at least one more year, at least to the end of 2021, but maybe even longer, depending on how it pans out the recovery from this crisis, right? So that's my point on trying to address.
Okay. Yeah, well answered. Besada, I will not put you in an uncomfortable situation because there are some questions about Petrobras. We will not talk about it. But there is one question that I do believe is very interesting, which is related to impairment. The question is, can we expect more impairments on assets worldwide? Because Petrobras, I think the question is more because Petrobras was a pioneer in analyzing the mid and long-term oil price, and we started seeing in the second quarter another movement of other companies impairing assets. So the question is, can we expect more in the third quarter?
I think you have to. It's completely impossible to predict something like that because it depends on the expectations of the price and also about the accountants, you know that. So there's a lot of opinion in impairment test. It's not a hard science. It depends on the expectation about price and the expectation about the cash flow of those assets. So depends on the volatility.
It's very difficult.
It's very difficult
to answer that.
I think that as an industry, we don't be obsessed about where the price is going to be because it's impossible to predict that. Nobody does that. Forget about it. Everybody tried to do that, but nobody could deliver that. And as an industry, you have to prepare to be, how can I say that, anti-fragile in order to sustain the volatility, because these for sure are going to be with us for the long term. So we have to bring, how can you put our companies, our assets, how can they can survive in a more volatility environment of price. So what you can do about process, about regulation, about operations in order to survive in a volatility environment.
So summarizing, to pay attention in the company's press release, highlights about assets, portfolio, region, etc., is key to predict potential impairments in other assets worldwide.
Yeah.
Guys, I highly appreciate your time, but we really need to finalize our panel. Was really excellent. I actually took several notes here by myself to help me. I learned a lot. But we are approaching the closing remarks, and I will start with Carlos to say what the closing remarks.
Anderson, thank you. Let me leave you with 5 points that really struck me from the conversation. The first is, in the short term, we are going to see more volatility. Besada just talked about volatility. We've had volatility raised in many different parts of the discussion. And given what's happened with the pandemic, we're going to see yet more of it in the near term. To be able to survive in that environment, it's necessary to be able to have low costs, to be able to have liquidity. In an interview that I did with Roberto Castelo Branco, one of the things he said was, normally cash is king. In the area of a crisis and a pandemic, cash is God. And I think one of the things that we need to think about is how to create that liquidity, and technology is going to be a key factor. Those who can bring the best technology to lower costs are going to be ones that are able to win. I think the second point is that one that's been emphasized, but that the world still is going to need hydrocarbons. We don't know exactly what the pace of demand growth might be into the future, but we still are going to need hydrocarbons. And those who are able to deliver the lowest cost products are the ones that are going to win. And so if you start the pandemic from the perspective of lowering costs, it's a lesson that's going to be useful and critical to be able to be competitive into the future. The third is the point on climate change, and Besada spoke about it, and it's a reality in the industry. And increasingly, we see companies that are making commitments to net zero carbon in 2050 or other kinds of emissions reductions. And it raises this point. If we start to understand that certain kinds of changes are inevitable, do we embrace them and try to benefit from them? Or do we stand there like a rock and allow that change to be pouring over us? And indeed, I think that if we embrace that change, we may be better off. And it's, I think, one of these questions that companies around the world are going to have to face. The fourth point is on the question of finance and funding, and we've had a good discussion about the sources of finance, the impositions or the requirements from government, the requirements from the private sector. Let me put it a different way. During this pandemic, many countries are investing 15 to 20% of their GDP in economic recovery. Let's hope that never again in our lifetimes that we are in a situation that our governments have to spend 15 to 20% of GDP for some kind of recovery. But if we're going to do it, do we do it in a way that embraces change for the future? Or do we do it in a way that builds in the model that we had in the past? And I think that's an important question for business and government to enter into a dialogue. And the final thing I'll just say is the importance of the leadership role of the oil and gas industry. At a point in time like this, when you think about what kinds of companies are able to manage massive projects with billions of dollars worth of assets, that are able to think through what are the structural changes that are necessary to provide energy. The kinds of companies that can do that are very much centered in the oil and gas sector. And so if this industry wants to embrace change, I believe truly that it has the capacity to be a leader in that process and still maintain its relevance and importance as we move into the future.
Joao, your closing remarks?
I will just say that I think I would like to leave the audience with the message that I believe in ExxonMobil. We really believe that the industry will be relevant for a good period to come. So the hydrocarbon industry will be around for a long time. The demand for energy globally will increase significantly in the future. There will be need for investments in all energy sources, and the share, despite the likely or possible or likely reduction of the relevance of the hydrocarbon sector on the whole energy matrix, its significance will remain very big, and it will remain very relevant. So there will be lots of investment opportunities, and Brazil could place itself in a very competitive way to attract these future funds for the industry. So we are in a period that of significant capital shortage, and right now the competition for these funds is quite intense. But even if it stays or it doesn't stay, as Besada say, we're not gonna guess the correct oil price. The need for replacement of the depletion of the existing production globally will continue, and as was also put by Besada, the low cost assets are the ones that are going to be produced, and but there will be a lot of opportunities in Brazil for that as well, if we get the right risk reward balance in our fiscal system.
Thank you, Joao. Besada, closing remarks.
Needs energy. If you think about a lot of people in the world that doesn't have enough energy to live a good life, so the world still needs energy. I think that we have a duty to deliver that, creating value for society and for our stockholders, and we didn't do that in the last 10 years. We have a poor return, and the environmental aspects change a lot, and we have to change also. So we have to adapt. Our resistance is futile when we see this kind of change. We have to adapt fast in order to still be relevant in this new world. So I think you have to embrace change and be prepared for the new challenge that we see in the future.
Once again, thank you so much. Besada, Carlos, Joao, was a very great event. I actually, as I said, I love it. And Fernando, Pedroso, thank you so much for organizing and also for inviting me to be part of this group that is really generating something different to the market. I will leave with you, Fernando, the final words.
Okay, thank you, gentlemen. It was a great event, but now let's change to Portuguese. Muito obrigado por terem participado desse evento. Como eu disse, é uma série de 12. Próxima semana, na terça-feira, no mesmo horário, teremos um webinar intitulado Desafios para aumentar a resiliência da indústria brasileira de óleo e gás. Teremos como moderador o ex-diretor-geral da ANP, o senhor Décio Odoni, e como painelistas, Rudimar Morezato, diretor da Petrobras, Tícia Andrade, VIP da Equinor, Adir Torinho, que falava em Arábia Petro, e André Araújo, que é o CEO da Shell Brasil. Contamos com a participação de todos vocês. Pedroso, considerações finais?
Primeiramente, gostaria de agradecer imensamente aos panelistas. Thank you very much, Besada. Thank you, Carlos Pascual. Thank you, João Vieira. It was very tough-provoking questions. SPE are in depth with you. Thank you very much. Gostaria também de agradecer ao chair e ao moderador da sessão, o Dutra, que conduziu muito bem essa sessão, foi realmente muito boa. e particularmente ao pessoal dos bastidores, a palavra que me faltou no início. Muito obrigado ao Itamar, a Jennifer e ao Ivan, que proporcionaram a parte técnica para que esse evento fosse realizado. Muito obrigado pela atenção de todos. Nós voltaremos aqui na próxima terça-feira, às 18 horas, para mais um instigante painel. Boa noite a todos, obrigado.